financial integration. So these numbers, of course, are not positive news. Having said that, I think some of these adjustments that are needed have already taken place, and hopefully, we will see also the possibility of restructuring in the region, as I said, in the corporate sector. Because of course, what happened is that they have become very linked through the value chain. So they particularly in some sectors, the car industry and so on, the countries in our region have become extremely interlinked. So these numbers are not good news, but I think that there's also a great flexibility in the region to try to respond to this.
Robert Curtis from the Hungarian news agency's London Bureau. Mr. Berglöf, you mentioned earlier on in your presentation that among the encouraging signs that elements of previous emerging markets crises like banking collapse are absent in the current crisis. Does it mean that you think that these elements have now been averted, have not been stopped from emerging for good?
Well, for good, I'm sure it has not. But I try to emphasize that these policy responses that we have seen, and of course in the case of Hungary, I think the IMF program and the contribution from the European Union has been important in stabilizing the situation. I think there was at some point some concern that maybe IMF would not have sufficient resources. I think that's where the G20 process have been quite helpful in giving some comfort that even though it's not going to happen immediately, but if there is real pressure, there will be sufficient resources. I also think that the fact that the other international financial institutions have managed to reorient themselves, and I'm speaking now also about the EBRD, that if I look at what we are doing today and what we did maybe 6 months ago, there's a very dramatic change, and I think that shows that these institutions, they were created to address these needs, and hopefully will show that these initiatives that have been taken will prevent this kind of crises.
Tanja Vujic, Politika, Belgrade, Serbia. I would like, if you could, Mr. Berglöf, depict to us current status of this global crisis within the region of Central and Eastern Europe. And if you could tell us, when you say that the worst case scenario has been avoided and the World Bank estimates that the number of poor and vulnerable people in the region will rise by 5 million for every 1% decline in GDP, on the banking sector and on the ground, we see not exactly balanced picture. How do you put those two things in one picture?
First of all, I didn't mention it, and I should have mentioned it, and I think it's very important to remember it, that even though we may see some stabilization in GDP numbers, the unemployment numbers will continue to worsen for a long time. So that's another thing we absolutely need to brace ourselves for, and of course that makes it even more important that we can deal with the problem of access for finance for the real sector, for companies that can employ people and so on. So I'm not in any way belittling these numbers. I think these are very real numbers, and I would subscribe to the estimates that the World Bank has made. What I was saying was that it could be even worse, and that we have avoided these cataclysmic events that we have seen in emerging markets. They were not only seen, but there was the typical pattern, I would say, of many emerging market crises. So I think it is remarkable, and that's what my remarks were meant to point to, is that we haven't seen it so far, and you can argue reason for why that is, but that's a fact.
Raymond. Raymond Lloyd, the editor of the Parity Democrat Westminster. The current economic downturn seems to have been started off in many older democracies with excessive consumerist debt, financed in the short term by savings in East Asia. How far has this imbalance affected the EBRD countries, and what is the bank doing to promote savings?
Yeah, I think it's fair to say that the way the region has grown has been through importing capital, and I think that was a healthy thing. The region imported capital from another part of the world, mostly Western Europe, that had more capital and capital-rich country, and that's what we wanted to see. It's true that it took a lot of this went into consumption, and it's something, again, you have to remember where these countries came from, and there was a lot of pent-up demand, for very basic things like housing, cars, and so on. I think that was what these economies responded to. It was supported by a financial sector that expanded and developed very quickly into the region. Maybe at some point, and that was not only our region, it was true for much of the world, there became we became a bit too complacent about risks, about there was some excitement about allowing the financial system to reach even further out. And we saw it, of course, in the United States, allowing people to buy properties and so on. I'm not saying, I think this was a healthy development on the whole. Maybe it went a bit too fast, and I think, when we go back and look now at what can be done in terms of changing regulation, supervision, what can be done to put better risk management practices inside the banks that we work with, I think that certainly comes from the lessons that we have drawn from this crisis.
Promoting savings. Promoting savings in Eastern Europe.
Well, I mean, promoting savings is something that. Why do people save? Well, people save to they save for when they fall ill, when they grow old, and I think what needs to be put in place is well-functioned pension systems, good health care system, and also we need to encourage saving behavior. Yeah, and of course, what is very good for savings is a stronger development of capital markets and offering more options for people who want to save in the economy, and that's, I think, where we need to make sure that in this crisis we don't throw out the baby with the bathwater, that we really make sure that these options are still there and multiply.
Yes. It's Dirk Heilmann with Handelsblatt from Germany. You write in your statement about the danger of accession fatigue. Isn't it rather that the existing Eurozone members are wary of taking on countries with high fiscal deficits?